Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, is real-time relative strength, a very, very important topic. I've done lots and lots and lots of lectures, but in my opinion, this is one of the most important lectures that I've done. You've probably heard me say that a few times in the past, but the reason this lecture speaks to me, and it hopefully speaks to you and is so powerful, is because we're doing this with real trades from the previous day, but we're also going to talk about the difference between what the textbook says and what reality of the markets are, because sometimes there's a difference. Sometimes you look and you're, wow, that's a perfect trade, looks just like the textbook, it's a no-brainer, let's take it. But that's not every trade we take. And I get a lot of emails and questions from people who go, well, geez, Jared, that trade looked okay, but it's not perfect. Why did you take it? So we talk a lot about that today. And when we talk about relative strength, the number one question you want to ask is relative to what? Well, in this case, it's relative to the market. And the market to us means the QQQ and the SPY, the SPY. You can use the IWM if you want to. I try to keep my stocks to the market that they're in. So for example, if I'm trading Microsoft, I'm going to use the QQQ. If I'm trading Boeing, I'm probably going to use the SPY. Okay, so I want a direct correlation to see exactly what the stock is doing compared to what the market is doing. And that's how we determine relative strength. And I say this in the lecture, but guys, if you could give me one thing, okay, one thing only in trading, say, Jared, would you take bottoming tails? Would you take topping tails? Would you take bounce off support? Would you take huge volume? All this other stuff. If you said you could only get one thing to trade with, it would be relative strength or relative weakness. Okay, relative strength or relative weakness makes up for so many mistakes. You don't have to be perfect. You don't even have to be that good to trade when you have extreme relative strength or relative weakness. Why? Because stocks on their own page don't care what the market's doing, and they generally go 2, 3, 4, 5 times their average trading range. So if you have a stock that normally does $1 a day in range, when you have relative strength or relative weakness, it'll do $2, 3, 4, $5 in range on that day. Okay, so we're going to still use the top-down approach, right? We're still going to start with the daily chart and break it down from a 1 minute or 2 minute or 5 minute, but we're going to incorporate the market inside of that today, and we're going to look at relative strength and relative weakness and why it's so important. But again, we're going to do this from trades that I took recently, and you'll see some of these patterns aren't perfect, but they're good, but because of the relative strength, they end up being great. Now, I want you to think about that. Sometimes we're allowed, okay, and this may be not as good for newer traders, but sometimes we're allowed to be a little bit more flexible, have a little bit more artistic freedom when a pattern isn't perfect, if it has great relative strength and great relative weakness. So guys, it's an unbelievably powerful lecture. It's a relatively simple lecture in that respect. It's only about 8, 9 slides, and it's only about 30 minutes long. So it's not super long, but one of the more powerful lectures that I've done in a long time, because to me, it's the number one thing, other than money management, it's the number one thing to help you be a great trader, is discerning what stocks are on their own page, what stocks are stronger or weaker than the market. So you don't want to miss this lecture. As always, guys, if you like it, please click the like button, smash that subscribe button. Also, don't forget to turn on those notifications, those click notifications, that little bell that you see, turn that on, all right? So you can get emails every time I upload a new video, all right? I'm Jared Wesley of Live Traders. Let's get to it. This week's topic is the power of relative strength trading. Last week we talked about the power of multiple time frame trading. In my opinion, relative strength, if you could give me one thing in a trade, just one, right? Somebody will say, oh, give me a bottoming tail, give me a 3-bar play, give me this, give me that. Give me relative strength. If you could only give me one thing, I would rather have relative strength than anything. Relative strength will get you out of more trouble than you can possibly, and this also goes for relative weakness also, relative strength or relative weakness. We've seen it many, many times. Stocks with no pattern whatsoever just go higher and higher and higher and higher and higher, and well, They don't have a pattern, but they keep going higher. They defy the market, all that. So what you're looking for every day and every morning when you look for your gap list is some form of relative strength or relative weakness to the market. And then in the first 5 to 10 minutes a day, your goal, to the best of your ability, is to discern which of those stocks on your list have the best relative strength and the best relative weakness, because those are the stocks that are going to be on their own page, and you're not going to have to be quite as perfect. You can take a mediocre pattern and they're still going to work, okay? You can take a great pattern and they're going to be rocket fuel, all right? So that's your job as a trader. If you want to know what the secret sauce is, or you want to know, hey, Jared, after years of experience, what have you extrapolated from trading the markets? Relative strength and relative weakness, okay? A stock that just doesn't give an F about what the market is doing. It makes up for a lot of mistakes in mediocre patterns. Okay, so let's dig in. But before we do, of course, we have to get to when will the insanity stop? All right? When will the insanity stop? Never. This one I thought was a good one. I got this one last week. No, not every week are they going to come from Wall Street Bets. In fact, last week's came from Market Watch. I'm the guy that went from $2,000 to $100,000 in a month. Ended 2020 with a bang. Intraday at the high, okay? $230,000, okay? Lost most with PLTR. I mean, come on, man. Chase the rest to zero with random weeklies. Roast the F out of me. Guys, 2,000 at a peak into 230,000 down to 1,056. That's pathetic. I mean, I don't want to spend too much time on this, but let's just take a step back. You guys realize that most of the people doing this are not rich. The guy started with $2,000. If he had 20, he would have started with 20. If he had 50, he would have started with 50, but he didn't. So to be up $100,000, $200,000, $230,000, and to not protect any, not even protect your initial investment, that's just dumb, right? Think about what I just said. To not even protect your initial investment of $2,000, that's just unbelievable, truly unbelievable. Okay, that is how and why these people are able to turn 2,000 into 100 or 200,000, because they're pure gambling. And every once in a while they get lucky, and most of the time they give it all back. Very few people cash out and take more than 50 to 70% of their profits with them. Learn from this, guys. You don't ever want to be in this position, okay? $1,056. That's really impressive. Minus 98.93%. This person lost 99% of their account. I'm only laughing because he says roast the F out of me. So we can laugh at you. Not with you, at you. Okay? That was dumb. And I hope, for this person's sake, that $2,000 was not a lot of money. I hope it wasn't their life savings. You guys laugh at that, but some college kids or kids in their 20s, that's all they got. All right? Don't do that. Don't be that person. Okay? So let's dig into the lecture. Relative, or I shouldn't say relative, real-time relative strength is what I entitled it. Real-time relative strength, okay? As I just said a minute ago, understanding relative strength is a very powerful tool, and we like, for the most part, to trade the open, all right? The first 30 minutes, the first hour of the day. And in the first 5 minutes, relative strength is a challenging thing to discern, get your hands on. And it's even with experience, it's tough. So sometimes it takes 10, 15 minutes to understand relative strength. And what's positive about that? What's positive is most of you should be waiting 10, 15 minutes before you take your first trade. I understand, the lore and the luster about wanting to trade the first 2 or 3 minutes of the day, but you should try to stay away from that until you have at least a couple years experience. And I know most of you won't listen to that advice. I understand that, but you should try, okay? So let's dig in. I took trades that we took yesterday. In fact, I think almost every trade on here that we're going to talk about today, we're going to talk about 3 or 4 trades today, was from yesterday. And you're going to note that every trade that worked yesterday was a relative strength trade, okay? So first one, OSTK, all right? We start with the daily chart always. So this is even before we get into relative strength, right? We got before the market opens, we're scanning our gap list and we're looking for opportunities, right? We're looking for what stocks are the best, what stocks have level 1 gaps, level 2 gaps, level 3 gaps, etc. Now, is there an element of relative strength to this? Yes, there is an element of relative strength to this, because if the market's gapping down huge like it was today, right? 1%, 2%, and the stock you're looking at on the gap list is gapping up, you automatically have relative strength. So that's a good start. Now, does that mean that that relative strength is going to last when the market opens at 9:30, 9:35, 9:40? Not necessarily, but in the pre-market, at least 8:30, 9 o'clock, 9:15, this stock is something that should attract your attention because it's doing the exact opposite of the market and doing so in a big way. Okay, so with regard to OSTK, this is a stock that the previous day had a topping tail, right? So it was up 3 days, right? Green day, and then it moved higher over these pivots, over this pink line, and then left a big topping tail. And then yesterday, in this case, it gaps over the topping tail, and now we see room. The pink line area is kind of that room. Now, you could look at the gap up that failed as resistance. You could look at the pivot at resistance, but it's somewhere in this range. We talk about support and resistance. They are ranges. They're not exact pennies, okay? So we can see this stock clearly has room from like 78 bucks to call it 82-ish, somewhere around there. So our job is to look for an entry. But what would make the entry even better? If we could have relative strength on this stock, okay? So let's take a look. So now we have the gap. Now we see the stock. Now this is on a 1 minute time frame. You guys know my opinion of 1 minute. I will trade 1 minute time frames. I like 1 minute time frames, but they also happen to be very aggressive time frames to trade in. 9:35, 9:45, 9:50. It's still an aggressive time frame. You can get whipped and shaken out of that very quickly. So what do we have here, though? What's the sign, the first sign? Well, the first 5 minutes of the day, the market goes sideways, right? Right in that area, okay? And then after about 9:35, 9:36, the market decides or starts to get hammered, right? Big red bar, green bar, red bar just drops from 329, 329.25 all the way down to like 327.25. That's a big drop. And it happens in about a 10-minute period from 9:35 to 9:45, give or take. What do we have during this drop from 9:35 to 9:45? Well, 9:31, 9:32, 9:33. From 9:33, OSTK does what? It rips. Well, from 9:35 on, the market tanks. From 9:35 on, OSTK rips. So we already like the gap, right? We like the gap already. Now we're getting more details, more information to help us discern whether or not we should trade this stock. So the question is, should we trade it right down here? I wouldn't. I think that's too aggressive. 9:33, a little bottoming tail doji. That's nice. Don't get me wrong. It's nice, but I think it's a very aggressive entry. Some people may have taken it and been paid for that. But for me, it's a little too aggressive. Stock moves up while the market moves back. That is what we call relative strength. I get this question all the time in emails. Well, Jared, what exactly is relative strength? What does relative strength look like? And I tell them the same thing all the time. Pull out your chart. Pull out the Qs or the SPY. Okay? And take a look. Does one look stronger than the other? That's that simple. Like, I'm not trying to be sarcastic. It's that simple. Okay? So in this case, the market tanks, the stock rips. Relative strength. Now, some people will erroneously think, well, GME starts to pull back around 940. And the market's still going lower, so GME is giving into the market. Guys, do you really think GME is giving into the market here? Honestly, no. GME is simply having a natural pullback after a 1, 2, 3, 4, 5, 6, 7, 8. Oh, sorry. Did I say GME? OSTK, my bad. Okay, too much GME talk. OSTK, all right? OSTK. So in this case, OSTK is up 1, 2, 3, 4, 5, 6, 7, 8 bars in a row. Well, a 4 or 5 bar pullback after 8 bars up is not relative weakness. It's a natural pullback, okay? Natural pullback to the market, or not into the market, to the stock, because it's tired. You just ran a marathon and now you need some rest. So you get a natural pullback, but here's the kicker. Right around 9:45, 9:46, the Qs start to put in a bottoming tail, and they begin to bounce. What happens right even before that? Even before the market puts in the bottoming tail, GME puts in a bottoming tail. So now you get a buy setup, and you're going, whoa, wait a second here. This is a stock that's still within its trading range. It's up 8 bars, needs a break. It's been super strong to the market, plus we like the gap. And now it's leaving a bottoming tail right as the market's leaving a bottoming tail. So what do you think is going to happen when the market bounces? The stock has already been very strong, and now the market's going to bounce. The stock's probably going to go ballistic, rocket fuel. Well, what happens to GME? The market bounces, goes from 327.25 up to 329, does 100% retracement. GME goes from 78 bucks, give or take, all the way up to $86. An $8 move. Now, again, I probably should have put the exact entry, did I say GME again? OSTK. My bad, guys. OSTK, okay, puts in a bottoming tail, all right? My point here is I should have put the entry in because it was like 78.25 and the stop loss was like, I don't know, 77, somewhere around. It's about $1.50, okay? This thing goes $8. And this is, remember, this is the part a lot of people are forgetting. This is a 1-minute chart. So it doesn't take long for this to happen. 9:45 to 10:15, not even 10:15, 10:10. It takes 25 minutes for the stock to go 5-1, right? That's impressive. And it all happened because of the relative strength that we saw against the market here. Well, it all started with the gap. But second, when the market tanks, the stock is strong. As soon as the market puts in a bottoming tail, the stock puts in a bottoming tail as well. In fact, OSTK almost did it again. OSTK leads the market here. So if you can, at any point in the day, get the market to help you, OSTK is rocket fuel. This is a no-brainer trade. This is a no-brainer trade, and I sadly missed it yesterday. Okay? Now, one more thing. A buy setup on the 1 minute is a turnaround bar play on the 5. Now, that's not always the case, but what I'm getting at here is this is a 1-minute buy setup on OSTK. But take a look over here. Now, is the entry a little later? Yes, it is. But this red bar right there, see that red bar here on the 5-minute? That's those 4, 5, 1-minute red bars right here. So those 5 red bars on the 1 minute equal this 1 red bar on the 5-minute. And what do you get? A little bit of a miniature. I wouldn't call it a full-fledged turnaround bar, but a miniature turnaround bar. Now, why am I commenting on this? There's a reason. There's a method to my madness. You guys want to take your trading to the next level? How about you buy the 1-minute buy setup, and then you add on the 5-minute turnaround bar? Think about it for a second. Your stop loss is like 77. Your entry is 78.25. Well, add at 80, give or take. That's where the turnaround bar happens, and raise your stop to 78 bucks. Okay? Pops, pulls back, and then grinds higher all day. And then late in the day at 2:30, what do we have? An ascending triangle, right? A wedge / ascending triangle. Now, I'm commenting on this because it's okay to start your trading very basic. Hey, this is a 3-bar play, this is a buy setup, this is a breakout, fine, that's fine. But you're going to note, and we're going to talk a little bit more about this today, as you get deeper into your trading and you learn trading better, you're going to realize 2 things. One, you can supercharge your trading by adding to your positions, and most, not all, most stocks that are strong relative strength will give you at least 1 opportunity to add. Not all, but most. And 2, you're also going to realize that not every trade is going to be perfect from the textbook. You're going to realize that when we have something like relative strength, we will give liberties to the trades we take sometimes. And you're going to see that today on the Microsoft trade that's coming up in a few minutes. Okay? Not every trade is perfect textbook, but when something has extreme relative strength, we're willing to bend the rules a little bit so that we can hop on board a stock that's definitely going, that's going to the moon. So anyway, there's your buy setup on OSTK. There's your turnaround bar on OSTK. Great initial entry on the 1-minute buy setup. Great add point on the 5-minute. Okay? Rips, pulls back, and keeps going higher. All right, let's move on. Next one, TLRY, Tilray. So, note, first 4 minutes of the day, Tilray, bottoming tail, Tilray, bottoming tail, Tilray, bottoming tail, Tilray, bottoming tail. First 4 or 5 minutes a day, the Qs do what? Well, they went sideways. right? So in some ways, very similar to Tilray. At the moment, you're like, okay, there's no great edge here on Tilray. And I would agree with that. The gap was decent on Tilray. It was a daily buy setup. But we can still call this a 3-bar play, right? An aggressive 1-minute breakout. Or you could call it a 3-bar play. Wide bar, narrow bar, rip. You could, okay? And there'd be really nothing wrong with calling it a 3-bar play. But what I want to focus on is after it goes higher. So you may already be in Tilray. It goes up, and then right here, we're looking at around 940-ish to 945, that range. Again, what does the market do? Okay? What does the market do? Drops. Tilray is going sideways. That's relative strength. Market is tanking. Yeah, I'll use the phrase tanking. For a 1-minute time frame, it's tanking. It's dropping $2 in an 8-minute period. Tilray is going sideways during that same 6, 7, 8-minute period with bottoming tails. That's relative strength. So again, what are we thinking? We're thinking, if the market can bounce, Tilray is going to explode higher. I need to find a way in this. Some of you may have taken the early trade, again, 1-minute breakout, possibly 1-minute 3-bar play, okay? And guys, quick question. Why is the stop loss down here? If this is a 1-minute 3-bar play, wide bar, narrow bar, rip, why is the stop loss down here? Talk to me. Audience participation. Why is the stop loss down here? Why isn't the stop loss under this bar right here, under bar number 2? Why isn't it right there? Good. You guys are paying attention. I love it. Exactly right. It's too whippy. It's too spready. It's too volatile off the open. And the stop loss is too tight. Tilray has a spread, 8 to 10 cent spread. So if you get into Tilray with a 20-cent stop loss, half your stop loss is the spread, which means if it doesn't work, you're going to take one on the chin, and it's not going to feel very good. You might lose 2R, 3R. But if you use the low of the day, I understand it's a wider stop, maybe 30 cents in this case. But we know Tilray can move. We know it can do $1, sometimes $2. So the risk to reward is still acceptable even if you use the low of the day. Now, would I do this at 10 o'clock? Probably not. But at 9:34, absolutely. I would buy it right there, put the stop on the low. So stock moves up while the market goes sideways. Then the market tanks, stock goes sideways. We're showing tons of relative strength here on Tilray. What we're going to do is we're going to add to the position right there. If you're not already in it. If you're already in it, then, you can add to it. If you're not in it, we can buy it right there. And again, put your stop under there. And what happens? Take a look again at the timestamp. This is 9:45. We know it from the last slide. 9:45, the market starts to bounce. Tilray starts to bounce before 9:45, right? 9:44, 9:43, Tilray starts to bounce. 9:45 comes along rocket fuel. One little pullback and then rip. Guys, it goes like 1980. Remember, you're in at like $18.30. That's $1.50 on a 30-cent stop. It's 5 to 1. And remember, it's a 1-minute chart. This is happening in about a 20-minute period. It's not like you're sitting in this thing all day. Okay? So this is what great relative strength looks like. And it's hard to discern that in the first 3 minutes of the day. But you can discern that after 5, 10, 15 minutes. What stocks are moving up while the market's going sideways or while the market's pulling back? Now, this is Tilray again, same stock. I'm getting to try to get you guys to look at multiple times. Basically what I'm trying to do is take last week's lecture where we talked about multiple time frames and combine it with this week's lecture of relative strength. So we already looked at the 1-minute Tilray off the open, 1-minute 3-bar play off the open. If you missed it, some of you might be like, I don't really like that consolidation. It's overlappy and choppy. But then you move to the 2-minute, and what do you get? You get a 3-bar play on the 2-minute. Wide bar, narrow bar, rip. Now, I understand this is not a perfectly equal high. If you look at the chart, it's actually 3 cents different. It's 0.65. It's 1865 by 1868. Okay? So it's close enough. Remember when we say relatively equal highs? I think 3 cents is relatively equal. Okay, is bar number 2 in the upper 50%? It's really close. It might be off by a couple percent. It's close enough. So if you missed this first trade on the 1-minute or you were too scared to take it, this right here is a nice 2-minute 3-bar play. Okay, that's a nice 2-minute 3-bar play. That's what the 1-minute breakout looks at. So my point is, if you're not sure about the 1-minute breakout, you're a little skeptical, like, it's a little bit sloppy. Move up to the 2-minute and now you're like, oh,
That's not that sloppy. It's just a 2-minute 3-bar play. So now we're taking multiple time frames and relative strength. They're the two greatest things you can have in trading. After that, just manage in between and take your money and go home. All right, and this stock paid you up 4 or 5 to 1 in a 20-minute period. Okay? Now, the other thing is real-world trading versus textbook trading. That's not a perfect high. It's 3 cents difference. This is not a perfect consolidation, but the relative strength outweighs the perfect pattern. It's a good enough pattern when you have this level of relative strength. And this is something I want you all to take with you. It's a good enough pattern when you have this level of relative strength. And this is something where I think a lot of traders skip trades or don't take trades or get fearful of taking a trade because maybe the pattern wasn't, quote, perfect. But that level of relative strength allows some flexibility with regard to the pattern. This doesn't mean I'm just going to randomly buy it. No, there's still a pattern here. It's just not perfect. But it's good enough because of the relative strength. Take that with you, okay? It's a very important comment. All right. Now, RIDE. Someone was commenting about RIDE a couple minutes ago. Well, let's start with the daily. RIDE has a bit of a daily buy setup here. It triggers over here a couple days ago. Almost stops out. Maybe it does. I don't even know. Almost stops out. And then yesterday it gapped up. Gapped up over multiple topping tails with room back to 28 bucks. This is our range. This pink line to this pink line. That's our tradable void. And that tradable void is about $3 or $4. Okay? From like 25 to 28. Okay? Tradable void. So what happens? Right off the open, RIDE does what? It gives us a 1-minute 3-bar play. But it doesn't trigger. Wide bar, narrow bar, nice gap, textbook 3-bar play. You're getting ready to put your order in and boom, it doesn't trigger. What happens to a lot of traders? And remember, this is really early in the morning, so things happen quickly. 1 minute goes by, boom, boom, boom. A lot of you guys you take it off your list. You give up on it. You're like, it broke the low of the day. It's done. And then you miss it. Yeah, I get it. It's a little disappointing. You have this perfect 3-bar play forming, and right as about to trigger, it rolls over. The good news is it rolled over before it triggered, unlike Microsoft, which rolled over after it triggered, which we'll see here soon. Okay? So again, don't give up on the trade. You spent 30, 40 minutes in the pre-market scanning for these 10 ideas, and now all of a sudden, after 3 minutes, you're just going to scratch it, you're going to scrub it, it's not worth it anymore. That's just bad trading. Okay? So be patient. Be patient. Be patient. And what do you get? Some people go, what? Unwall took this trade, if you guys remember yesterday. And this is where this lecture becomes important. Same situation, market tanks. It's the same market, right? We're talking about the same cues from yesterday on all 3 trades. At 9:35, 9:36, market rolls over. Red bar, red bar, red bar, red bar, red bar, red bar. Guys, what's RIDE doing at that point in time? What's RIDE doing? It's going sideways, yes. Is it sloppy? Doji bar, topping tail, bottoming tail, topping tail. Yes, it is. But what does it have? Extreme relative strength. The market's taking it on the chin from Mike Tyson. And this stock is taking all the punches and not falling down. It's holding near the high of the day. So this becomes an opening range breakout, either on the 2-minute or the 5-minute. Pick your poison. It's your choice. The stock goes up, rolls over, and this is where we saw the 1-minute 3-bar play not trigger, rolls over. But during this time, because now we're on a 2-minute, the market just gets hammered. So Unwall looks at this and goes, damn, I like the gap. I love the fact that the market's tanking here and is probably going to bounce because it's on a 50% retracement, and this stock is holding the highs. I get it, it's a little whippy. I get it, it's a little sloppy, but that's okay. Why? Because we're just giving a wider stop loss. Right? So you're going to get in here right at the pink line, right on 1, 2, 3, 4, at the 5th bar of the day. So right around 940-ish, give or take, okay? At the high of the day, which happens to be like 25.50, give or take, and your stop loss is going to be the low of the day, 24.50. Boom. Stock rips, pulls back, rips, gives you an opportunity to add. Tough add point, but it gives you the opportunity to add. This is what good trading looks like. And the reason I chose these, not just because they happened yesterday, they exemplify what I would call a normal day of trading. What does that mean? Well, we took some perfect patterns yesterday. Microsoft, which you'll see next slide. It failed. Oh well. We took some, very good relative strength patterns, but the actual pattern, 3-bar play on the 2 minute on the last slide, wasn't perfect. But the relative strength was good enough to take it. This is an opening range breakout that a lot of people would skip because it's sloppy. But when you throw in the level of relative strength, screw the sloppiness. It's got so much strength. The second the market pivots, you're good. Think of it this way. What would it have taken for this to stop out? Total market carnage, right? The market's already getting slapped around and it's not going lower. So for this stock, if you got in it on the pink line here, for this stock to break the low of the day would take the market going down to 326 or more. Certainly it's possible. It's just a less likely event to happen. So when you start thinking about this, you're playing the odds. Yes, it's a little sloppy, but it is an opening range breakout with a decent gap. But it's got tremendous relative strength. So for this to stop and not work, the market has to shit the bed, literally. And it's already getting hammered. So how much more does it have to get hammered for this not to work? The answer is a lot. So it's worth the risk. Anmol did a tremendous job picking this out because I chose not to take it because of the sloppiness. He said, screw the sloppiness. Relative strength supersedes the sloppiness. This goes back to what I talked about on the last chart. Sometimes we can give ourselves a little more freedom, right? Give ourselves a little more room, flexibility to take a trade when it has extreme relative strength or extreme relative weakness. That's what Anmol did. You banked 3R on this, $3,000. And you did it in less than an hour. Think about what I just said, $3,000 in less than an hour. There's people that will work 160 hours to make what he made in an hour. Yep, you heard me. He'll work an entire month, 40 hours a week, times 4, 160 to make 3 Gs. You made it in an hour because you made good decisions because of the relative strength. Now, last slide. Microsoft. You guys remember this one? I said shit happens on this. Why? Because it does. We took a great trade on this, okay? I didn't put the Microsoft daily on this, guys, because I want to talk about something different. Wide bar, narrow bar, and there it is. That's a textbook pattern. They don't all work. That's why we use stop losses, okay? So wide bar, narrow bar pops up, peekaboos us in, and then boop, stops us out. It stopped me out in, I think it was 35 seconds. It was 25 or 35 seconds, okay, literally. It's one of the quicker stop outs of the year, all right? These happen occasionally. Oh, well, took our stop. We got back in. Where did we get back in? We got back in over here at 232. I actually got back in at 232.70, but nonetheless, this is the area you'd want to get back in. Now, here's the rub. Initially, I thought Microsoft is showing some relative strength to the market, but then the market tanked and it took Microsoft with it, and we stopped out. There's not much you can do. You're going to stop out sometimes no matter how good or bad the trade is. Fine. What do you do afterwards? Do you sit there and... All right, sorry about it. You're just going to sit there and cry over it? No. Okay? You're going to figure out, is there another opportunity here for me to get my money back? Okay? So pulls back, chops around for a little bit, leaves a bottoming tail, but note, it's staying in a sideways range here from 10 to 1030. From 10 to 1030, the market had a big roller coaster. It went up, went down. So Microsoft moved higher a little bit with the market, but not as much as the market. So you could have construed this as some relative weakness, right? Because the market did 100% retracement and Microsoft did not. It did like a 70% retracement. But during this nasty pullback, Microsoft does go sideways, okay? So this is a very sloppy sideways trend. But when you start seeing the double bottom come in here on the Qs at 327.50, you start thinking to yourself, we're probably going to get a bounce in the next 15 minutes. Probably, because we're deep enough into the retracement level, 70%, that buyers are probably going to start stepping up. Is that a guarantee? No, it's not a guarantee, but it's a likely, okay? And we don't have guarantees. We can only test the odds, and the odds suggest likely bounce coming in the market. Well, during this pullback in this huge red engulfing bar, Microsoft hangs out at 232. Oh, that's not bad. So as the market starts to bounce, Microsoft leads the market back up, right? So the market bounces at, I don't know what this is, 1024, something like that, bounces back up, and by 1030, it's in full rip mode, right? Even breaks the double top. Microsoft takes it a step higher, goes higher, pulls back, goes higher. Okay, and on a 1 minute, there's probably a buy setup in there. So yes, this is sloppy, But when you compare it to the market, market's at a 70% retracement. Microsoft's in the middle of its range, consolidating. So now it's showing more relative strength. And we believe the market's going to go higher, get back in. And we did. I got back in because of the 84% rule, but some of you guys got back in at 230, 230, 230, 240, and you got your 2R on this thing. Now, is this something that a new trader would likely take? No. This is something probably only an experienced trader would take. But a new trader should be taking the last three ideas we looked at. When we looked at OSTK and we looked at Tilray and we looked at Ride, those are trades you need to be taking. Okay? I don't want to pat myself on the back on this one, but guys, in my opinion, we've done a lot of lectures in here, hundreds and hundreds of them. This is one of the more powerful lectures you're going to hear. I understand people love when we talk about right out of the textbook, right out of PTS concepts. Oh, there's a 3-bar pullback with a bottoming tail at minor price support with a fifth, blah, 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 blah. Guess what? The real world doesn't always work that way, okay? The real world doesn't work that way. These are real world trades that were actually taken yesterday by myself or Anmol or people in the chat room, okay? Some were perfect and failed. Some initially didn't do well and then later on worked. Some, as we talked about on the last slide, you had your perfect pattern, the pattern never triggered, and then all of a sudden you forget the stock. And then it goes higher later and you slap the desk and you're like, shit, that was on my gap list. How did I miss it? Focus, because you're too worried about looking at GME or AMD, or not AMD, AMC. Forget that stuff. Focus on the stuff that you're actually going to trade and make money from, okay? So my point is these 4 trades that we looked at, okay, represent real life trading, including the sloppiness, including the relative strength. This is how it really happens. So once in a while, 3 days a week, somebody says, well, what was the pattern on that? Because sometimes we'll take some artistic freedom, artistic liberties when we take a trade because of the extreme relative strength. It may not look like a perfect 3-bar bay, but it was close enough with the level of relative strength that we had. Okay? And again, for new traders, I do want you focused, for example, let me go back to this. I do want you focused on perfect 3-bar plays like Microsoft or perfect buy setups like OSTK earlier, right? I want you focused on these things. I do. There's nothing wrong with perfect patterns. They're perfect. But as you gain experience, you're going to start seeing, for example, somebody today took Microsoft at 231. It's a great trade. But that's something you're not going to see in the textbook. Now, you might find that in Anmol's strategy class, but that's more advanced. You have to take PTS to get to the strategy class. But that was a great trade by Roy today. So those are the things I want you to recognize. So yes, this lecture is about relative strength and the recognition of relative strength, but it's also recognizing when you have extreme relative strength, you can take a little bit of a liberty with the pattern not being quite perfect, and you'll most likely get away with it. Having said all of that, you still need stop losses when you trade. Otherwise, you'll end up like Melvin Capital in GME. All right, so that'll do it for this week's lecture. I'm Jared Wesley. We'll get back at it again next week.